Hello, I'm Brownfield anchor reporter Megan Grebner. We're at NAFB Trade Talk in Kansas City. With us is protein analyst with Rabo AgriFinance, Don Close. Let's start first with a big picture and talking about the global protein outlook as we look ahead to 2020.
The disruption that we've had in the marketplace in 2019, led by China, but the spread of African swine fever throughout Southeast Asia, now into Indonesia, it's not over.
It's not just in China anymore. We've seen it in several different countries. So as we take a look at that, how does that not only impact the swine market, but those other proteins as well?
Our initial view was that broilers would be the grand prize winner just because of the life cycle and the lower price. We thought that pork would be a big winner and just on filling the void of production, and felt that beef would probably be a winner, but third place. Beef has been much more competitive or much more a winner in this whole shortfall than what our initial expectations were.
For U.S. beef producers, I know we saw a setback in prices after the Tyson fire and cash prices dropped significantly. They really have made a steady climb in recent weeks and have pushed back through those levels. How does that set us up then for the rest of this year and going into 2020?
One of the real drivers in that, number one, beef demand, both domestic and globally, continues to be incredibly good. While it's a complicated chain of events, it's all driven by that global shift in trade flows.
We're talking about pork, whether we're talking about poultry now at this point,
yes,
and now beef. So let's talk a little bit about the trade situation, not necessarily just with China, but some of those other markets.
The real impact will be the U.S.-Japan agreement, and that we're on equal tariff footing with the Australia, New Zealand. U.S. and China trade, yeah, it's good. We're going to send a lot of pork, but the beef trade, we're really talking long ball.
Where does USMCA play into this whole thing?
It's a huge deal. If you look at changes in that agreement on protein, there's really no significant changes from what was in the U.S. trade agreement. So it shouldn't be a big influence short term, still a very, very important trade relationship.
Do producers need to think maybe about protecting and maybe mitigating some of their risk?
If there was ever a time, because of market volatility and because of the level of risk exposure that producers are facing, I think it's absolutely time to have a risk management plan.